is now the panel that will be speaking about the vision for the future, experts' insights, financial infrastructure of the future, a roadmap for transformation. I will be inviting on the stage Olga Giordao, Chief Executive Officer of Euronext Securities Porto and now Milano as well. Congratulations to Olga, by the way. Isabelle Delorme, Managing Director, Global Head of Product Strategy and Innovation at Euroclear Belgium, Euroclear France, Euroclear Netherlands. Dimitri Patin, Deputy Director General of Market Infrastructure and Payment at the European Central Bank. And Francisco Bejar Núñez, Co-Head of Custody Operations at SIX. So all of you, please do join me on this stage. It's not a traditional panel. Yes, I do invite you already to be seated here. And so Olga will be the first one to present, please. And so it will not be a traditional panel in the sense that we will not be having an exchange based on the prepared questions, but it will be, after we have heard all these wonderful presentations, the possibility for you, the audience, to raise questions and to see what you have as major concerns of major suggestions coming forward for the visions of our industry. So thank you, and now the floor is to you, Olga. We're very interested to hear what you have to tell us.
Thank you. Thank you. Good afternoon. Good to see that the room is still full after lunch. So today we're here to talk about transformation. Transformation not as an aspiration, but as an objective. Our industry stands at the crossroads. The infrastructure that has made us successful for decades cannot carry us into the next chapter. What got us here will not get us there. And here's the paradox. Everything has to change for nothing to change. Central securities depositories are and must remain the backbone of market stability and resilience. T2S, as the true enabler of cross-border integration, is and must remain at the core of our business. That is non-negotiable. But to unlock competitiveness and growth, the environment around us must change. We must evolve. All of us must evolve. If we cling to the old world or to old remedies, we risk not only stagnation, we risk becoming irrelevant. If we embrace change and innovation, we preserve what matters the most. Let's be honest, the issues that we are facing have been discussed at every industry event over the last years. Yes, the European post-trade landscape is fragmented. We have more than 30 CSDs, each tied to their national laws and practices, creating complexity, inefficiency, and cost. And this fragmentation hampers investment, trading, and capital raising opportunities. It discourages seamless cross-border trading and creates friction, operational risks, and costs. But let's also face this. The ingredients that we need have been there for a long time as well. We have had T2S as a common platform for a long time. We have had CSDR and MiFID. They have allowed for competition for a long time. The late Capital Markets Union, now Savings and Investments Union, was already very ambitious. But for years, nobody put these ingredients together and found the right recipe. The kitchen was full, but the meal was never served. And finally, things are starting to move. There's a challenger shaking up the status quo, proving that competition, not just consolidation, can deliver efficiency and innovation. Our objective and roadmap are clear: to transform Europe into a truly integrated and competitive capital market. This by building a harmonized, innovative, scalable operating model backed by secure and future-proof technology. We want to be the CSD of choice in Europe. This will allow clients to consolidate issuance, settlement, and custody activities for the European market in a single CSD. And we will give them the benefit of a streamlined post-trade operations, optimized execution costs, enhanced liquidity, and simplified market access across Europe. Larger clients will be able to integrate their own operations across borders, and smaller clients, who are often focused on their domestic markets, will benefit from a modern, stable platform supporting their core business. This is not just a technical upgrade. It's a shift in paradigm, a shift towards simplicity, efficiency, and choice. Today, Euronext Securities operates 4 CSDs in Italy, Portugal, Norway, and Denmark. And in parallel, we're in the process of acquiring ATHEX. Starting September 2026, Euronext Amsterdam, Brussels, and Paris will designate Euronext Securities as the CSD of reference for equity and ETF trade settlements. That's a start, because that's where most of the complexity lies, and it's only, but the model will be able to support all asset classes. This is a first step to a wider ambition to manage European capital markets. This new paradigm brings a lot of advantages to market participants. Custodians, settlement agents, brokers will have the choice between an issuer CSD model and an investor CSD model. One single point of entry through our hub in Milan, or multiple points of entry through the various CSDs. T2S will serve as the backbone for interoperability in this model, enabling frictionless settlement across multiple CSDs. But this new option will also bring benefits to issuers, who will also have the choice between a local issuance model and a European issuance model, enhancing liquidity and attractiveness of their shares, broadening their investor base, simplifying their journey on the capital markets. Service levels will be the same, because the service will be delivered through a common platform and a common team. So we're the first one to offer something unprecedented, a real choice against fragmentation. For the first time in decades, clients have an alternative to just domestic CSDs. Our open model allows them to use Euronext Securities, even if they trade or clear elsewhere, and trading members can settle at another CSD if regulatory conditions are met. Vertical integration does not mean creating silos. It's about fostering integration without breaking liquidity pools. And this is how Euronext is driving the move from a fragmented landscape to a unified, competitive European capital markets by integrating markets for real. The standstill in the CSD space has lasted for a long time. Europe, as we know, cannot afford to wait. Last year at this same conference, some argued that there was no fragmentation in Europe, given that the big chunk of assets is already concentrated by the 3-5 largest players. And fast forward 1 year, here we are, the stance has totally changed. We all accept the issue of fragmentation and the benefits of reducing it. But what's the best way to get there? Is it by continuing to connect 27 markets to each other? In theory, that sounds tempting. Everyone connected to everyone. And the idea of creating all these links has been around for as long as I've attended these conferences, and we already have many of these links. But let's ask ourselves, is building such a spider web the most cost-effective way to do, regardless of how much business actually flows through these links? Surely somebody has to pay for that. Is building such a spider web the most efficient way to reduce fragmentation? We all remember the old spaghetti diagrams. I'm sure none of us want to be there. T2S was designed to avoid that complexity. Instead of dozens of bespoke bilateral connections, T2S provides one common backbone where all participating CSDs interact under harmonized standards. This is how we achieve interoperability without recreating inefficiencies. We're now thankfully past the voices that advocated for the establishment of a single CSD in Europe as the remedy to overcome fragmentation. Some would argue that that the competition model creates new types of fragmentation. But look at what the recent Oxera study says. The fact that different securities are issued and settled through different CSDs does not, in itself, fragment the settlement and custody of these individual securities. If all trades ultimately converge to the same point of final settlement and custody. And so, competition between CSDs will not result in more fragmentation as long as all CSDs in the EU are connected and use T2S, because then all CSDs together form one single network. Unfortunately, there are still some CSDs outside of this network, and this creates fragmentation. Therefore, competition can drive efficiency, providing that the right conditions exist. Or in other words, competition supported by the adoption of T2S by all EU CSDs is the mechanism through which the current fragmentation and inefficiencies can be addressed. So the question is not whether we connect Europe, the question is how we do it. And the answer to this question will define Europe's landscape and efficiency for the next decades. But let me come back to the essentials. In building the roadmap for the future, Euronext Securities embraces a fundamental truth. Focus beats complexity. And innovation is what will prepare us for the future. Trying to be everything to everyone would only dilute our impact and increase costs. Instead, we choose to be a catalyst for change, focusing at creating and delivering a harmonized, resilient infrastructure that empowers issuers, investors, and intermediaries. I'm standing here before you today, but the feedback we get from the market has been overwhelming. The market likes innovation, harmonization, and the market likes competition. That's our future, our purpose. So I would say, let's shape this future together, and preferably now, before we all get entangled in T+1. Thank you.
Thank you very much to Olga Jordão, indeed, yeah. So, Isabelle, now we're leaving the floor to you, up to you. No. If you prefer to be seated, that's also very possible.
I think it would work. I just wanted to have a slide on the slides, because I have a few slides. Yeah.
Just perhaps to remind, indeed, to the colleagues in the audience to make sure that you do ask the questions to all of the speakers. So you have this possibility, and we will be having something like 20 minutes and of all these presentations afterwards.
Thank you. And thanks, Hannah, for having me today. I think we have an ambitious topic, but all of us in the room are working hard on answering the question, what will the market infrastructure look like in 5-10 years? So it's the job of all of us in the room, more or less. And so I think it's an interesting conversation, even though a bit, a direct way communication. But we are putting some hypotheses and trends on the table for further discussions. So indeed, not to describe in much details how Euroclear will look like or other infrastructure, I choose to go through 5 trends. Key trends for us, and how we're going to answer to that. First, SIU. Because SIU, that's the context in which we evolve. So it's all about mobilizing the huge pool of dormant savings sitting in banks' deposit. And the title, which I chose, was single access across all markets and all asset classes, could have been creating more attractive and safe investment pathways for households, because this is what it is about. And we see 2 conditions of success. First one, indeed, is that market infrastructure must play their role and must keep on working on the capital market integration, for sure, as Olga mentioned. The second one is that additional measures should be taken to stimulate the investment, like tax incentives, education. I mean, these topics have been discussed now for the last year and a half around what should we do to stimulate the household investment and retail investment. And now what does it mean for post-trade? So it's in the middle of my slide here. Probably the first thing is simplification. You know, this operational complexity that we often describe, and especially cross-border, is something that we need to address, and for the equity market in particular. Second one, indeed, the freedom of choice. You know, post-trade services must be accessible on a non-discriminatory basis and fair competition. And the third aspect of what we have to push forward is the resilience. Our answer, I know you know the answer that Euroclear is making to that challenge, but I think important to remind that the way we answer to the SIU challenge and this maybe supposed fragmentation when it comes to the capital markets, we all know that for the fixed income, fragmentation is a bit theoretical, but that for the equity market, indeed, we can do better altogether. And the answer that Euroclear is bringing to that question is very simple. This is the title this time: a single access across all markets and all asset classes. It's a fact that there is still a bit of work to be done. We often say that a lot has been done to become a hub and offer the possibility for all investors to have, you know, a one-stop shop, you know, one security account, helping them dealing with all asset classes at the same place and reaching out to the 27 member states. But still, if you look at the several links that are not totally up to speed when it comes to, you know, to having links, cross-border links that help manage both fixed income and equities in full respect of the local specificity. So we can do a bit better. And you know that between now and 27, Euroclear took the commitment to connect all the 27 member states with the maximum efficiency on the different links that we are building further. And if I had to conclude on this slide, would be to say that post-trade is probably about to replicate what is happening at the trading side. You know, if you look at the pan-European trading venues, some of them have really a strong statement on the open access and single point of access. And I think it's very important that us CSDs in the room continue work together on this, the way we replicate what the trading venues and exchanges are pushing forward. Second message is very simple. We have all to adapt to far shorter operational timings. And it's not only T+1, it's the fact that Europe will move forward towards, you know, expanded late trading, electronic trading, and most of the activities we know will push us to a much more efficient operational cycle. So I mentioned T+1 for settlement, of course, T+0 repo markets, 24-hour trading that have been announced by American players for 26, etc., etc. So there are multiple examples of all initiatives taken that will push us, CSDs and infrastructure, to respect much shorter time frame and operational days. So this is a second trend that I would like to insist on. It goes beyond T+1. It's going to be even worse or better. It depends on how we see things, but with digital assets, because this continued capital markets, this almost 24/7 or 24/5 activity for trading and security settlement is something that is in front of us, but not that far. Third one, we mentioned SIU, but SIU, if successful, and we all call SIU to be successful, will support broader investment in funds. It is also known that ETF will double in size. Private assets will reach out to high net worth individuals and some retail investors. So here you have the answer of Euroclear on the slide, but more importantly for us today in the room, the message is to say SIU will come with the necessity and the duty to be even more efficient on the fund side. So you know what we represent and what we have been working on for the last 2 years on the funds market. We call it Funds Place, helping investors and distributors to manage everything at the same place. And the next step here is digital data management. How do we make sure that the user experience for issuers, distributors, custodians improves, and that data management offers a possibility to, support even wiser decisions on the investment side. Fourth message important to me, because I think the biggest transformation for the infrastructure won't come from reinforced electronic trading or late trading or even private asset post-trade services. I think the biggest transformation will come from data management and AI. In terms of transformation, revolution, and the scale of the changes we're going to have to implement, it comes from that. So here on the page, I mean, just a few sentences to give the variety of situations where we have to adapt. For instance, consolidate data into a unique data layer across jurisdictions. As long as TSD are not able, to display qualitative data and very depth in the data we propose, we will get stuck. So consolidate data, key. Scale AI-driven automation, also key. Two examples that we have, things we have implemented just for you to understand how far it can go already. NIP or NIP 3 means that we are at the third generation of leveraging AI for new issues, prospectus expansion. I think this is the way we leverage AI to make sure that instead of managing all the prospectuses manually, it takes hours, as you know, all of you know well. We have implemented a way with machine learning and a lot of algorithm to make sure that we can manage the prospectuses automatically and have only a few minutes human intervention to just check fields that the machine is not totally sure about. So the efficiency and the accuracy of data we get into the securities database thanks to this very performant tool is huge. And you have Stéphane Bernard at the second rank of the room. If you have many questions on this one, you can reach out to Stéphane. I think you have been using that for 2 years now, and it's improving day after day with a lot of benefits for us as a CSD. The second one, Easy Focus Plus, has even more, let's say, benefits for the industry. It's a settlement efficiency platform where our clients will be able to derive, the predictive settlement fails and how to reshape the settlement journey. And, it comes with huge benefit in this T+1 context that I have been mentioning already. So the reality of this infrastructure transformation is probably relying on our common ability to leverage the data we have in our database and how we leverage AI to make sure that these tons of data we operate and manipulate every day are, managed for the common good. And this ability to manage it at scale is probably one of the challenges that we face as an industry. Last but not least, the fifth trend or reality, let's say, is about to recognize that it's there. The digital assets and the capabilities to operate digital assets are almost there. In a way, we could recognize today that speculation, experimentation, collaboration on that field for the last 7 to 10 years has led to a situation where the industry, trade and post-trade, has gained some capabilities. So we have now, in terms of people, the experts we have in-house, in terms of platforms, in terms of, logics and knowledge. We have everything we need to take the right decisions to decide how we will manage both digital assets and traditional assets, how we will connect digital platform to traditional platforms, and how we will ensure full interoperability between not only this new world digital assets ecosystem and the traditional assets platforms and ecosystems, not only interoperability between those two worlds, but also interoperability between all ecosystems that will, help the assets circulate from one ledger to another. Why am I insisting at length on this one? It's that, and we have said that in many panels for the last 2 years, but if we are to recreate the fragmentation in the new world, we are mistaken. We do a big mistake. So the responsibility, the common responsibility that we have, all of us here, is to make sure that we don't recreate a fragmented world, a world where you have so many specificities, so many, exceptions and so on, and that we take advantage of having new kind of assets and new technology in our hands to make sure that from scratch we create a world that is far simpler and still resilient and efficient. So this will be my last message on this coexistence of digital assets and traditional assets. Infrastructure have a strong responsibility in that field. So maybe the answer to the question will be, for sure, the future of market infrastructure is about innovation, collaboration, and remains a lot about efficiency and resilience, if we want to drive, households' investment into capital markets.
Thank you very much to Isabelle. Well, I think it is very complicated to ask questions to both of you, at least until now, because you know so much, and it really feels like you have reflected upon all the possible questions that we could be, and managed to say it in 10 minutes, so that's a challenge, but still to the audience, of course, do not hesitate. And we will now be passing on to Dimitri Patin from the European Central Bank. So Dimitri will be speaking indeed about their work on the upcoming projects, innovation projects on their side. Thank you, Dimitri. The floor is yours.
Yes, good afternoon, and thank you, Isabelle, for bringing the point of, I was worried that no one had brought the element of digital assets, and I would have felt bad being the only one talking about that, but now I'm reassured. So good afternoon, everyone, and thank you for having me. My angle will be slightly different than what you heard so far, and I guess than what Paco will be bringing afterwards. I will share the views of the central banks in this fascinating debate of the FMIs of the future. I will start with a brief reminder of the Eurosystem objectives. First, you have the integration of European capital markets. The current fragmentation across Europe is well documented, as well as the impacts of such fragmentation on the efficiency, on costs, and also on the ability of investors to go across their national borders. I had the same assessment that 1 year ago, the speech or the voice line was slightly different. Everyone said there is no fragmentation, there is no need for deeper integration. I'm actually happy to see that this is now recognized as an element where improvement is needed. This objective is not only the objective of the Eurosystem, I believe it's an objective of most of us, if not all of us. And as I just mentioned, several interventions highlighted that despite the efforts on all sides, this issue still remains relevant today. It's, by the way, one of the focus items under the SIU. The second objective is innovation, and our work on DLT demonstrates the desire of the Eurosystem to engage with the industry to support innovation. The recent decisions from the Governing Council to progress the projects that you know now all, I hope, Pontes and Appia, are a clear sign that the Eurosystem is eager to take an active role in this respect. I will cover that in the last part of my intervention. The third objective is independence, and safeguarding Europe's monetary sovereignty is obviously a key objective of the Eurosystem. The recent changes and tensions in terms of geopolitical landscape have moved this element of the strategic autonomy even closer from the main stage. It has become an item that is even more present and relevant than ever before. And linked to the previous objective of innovation, we believe in the Eurosystem that having a euro wholesale central bank digital currency would support mitigating this risk on strategic autonomy by offering a trusted public settlement asset in euro in a tokenized forms, and also by creating the incentives to the private sector to innovate while remaining anchored to central bank money. Last but not least, our fourth objective is to be considered from the angle of safety and resilience. And of course, the three other objectives should never be undertaken putting at risk safety and resilience. It's a bit stating the obvious, but I felt I had to say that. If I move to the next one, the current status. So our future is not filled with only transformative change and new technologies. Our future is also filled with day-to-day actions. And the next two slides will cover the current status, which I guess all of you know even better than I do. but also what we can do in order to improve that. And we all hope for a clear and forceful SIU we will see in a few weeks' time. If we compare the current situation with the one of 2 decades ago, we can easily say that the situation has improved significantly. In the field of settlement, I heard, I think, 50 times already T2S. That's a good news for me. 2/3 of all CSDs in Europe use T2S. We have aligned cutoff times. We have established common rules for settlement finality. During one of the breaks, I was having a chat with a former colleague, and we were recalling those nice discussions that we had on establishing the moments of finality in T2S. It looks simple, but it's not easy to achieve. We also have technical rules for cross-CSD settlement. In the field of asset servicing, good work was done under the auspices of the AMISECO, so the Advisory Group for Market Infrastructure in Securities and Collateral Management, and also thanks to ECMS. We have achieved good progress in terms of market harmonization. Still, I think there is a wide consensus that this falls short of collectively matching our ambition and expectation. What can be done to bring us closer to the desired states? When I asked the colleagues to help me in this respect, not surprisingly, some were inspired by what happened in the payments field. In the payments field, you have the single European payment area, SEPA, where you have, I would say, single schemes, but for different types of payments, single schemes that are actually mandated. And we believe that in Europe, we would also need single rule books in the field of post-trade. I was playing with acronyms and saying maybe we have SEPA, maybe we need CESA, a single European settlement area with enforced common rules and market practices. The recent AMISECO report that was delivered a couple of months ago, I believe, gave a roadmap for that. But we all know that voluntary adoption does not necessarily always go well with speed of adoption. We could say the same about a single European corporate event area. And maybe we would also need to establish, that came also in some of the interventions this morning, we should also establish a standardized interactions between issuers and the issuer CSDs. This could cover data element, data representation, but also the fact that the golden data is with the issuer CSD, but that should come with a duty for the issuer CSD to seamlessly share and propagate those data with every relevant stakeholder. Again, the AMISECO has covered this part, this element in its roadmap for ISO 222. It may look a bit surprising, but it was covered on that occasion. These elements would support a higher interconnectedness between infrastructures with an increased coverage of the CSD links, both in terms of assets covered and also in terms of geography. Of course, this would not be possible without a strong political and regulatory support. I believe we have that now. Yes, I started with a brief reminder on our core objectives. And having those in mind, I recall integration, innovation, and independence. And considering the ever-increasing trend towards tokenization, we believe that there is a clear and pressing case for introducing a tokenized version of the euro. We call it also CBDC. This morning in a panel, there was a question on the driving forces for the next 5 years. And the first one, I noted 38% technology and tokenization. So I believe this is a clear convergence of views. Back in February, following the successful work that we did in exploratory work, the Governing Council mandated the implementation of a solution that is combining both the need to go fast, but also the need to be ambitious. And that translated into a two-tracks approach. You know, I hope the short term is Pontes. Pontes will make it possible for two participants wanting to exchange digital assets or tokenized assets to transfer the cash also using a tokenized form of central bank money. It will be there in Q3 2026. I have a date for the launch, but I cannot share it today. And we have already established a Pontes market contact group to make sure that the interaction with the market is what we need to make this a success. We know that the first product that we deliver will not be perfect. There will be improvements. These improvements will also be fueled by from the long track, the APIA track. With APIA, we are more ambitious, so we want to establish a vision for a wider DLT-based European ecosystem, encompassing the whole value chain. This vision will be translated into a concrete roadmap with milestones and delivery steps. So I heard this morning, we don't want a big project that will last 10 years before we deliver something. We have really the ambition to deliver already next year a first product, imperfect, of course, but then we will improve it by means of a constant roadmap and frequent deliveries. Of course, we will deliver more information about this. We are busy developing a vision for APIA. And when we say vision, it means that we are also willing to adapt it. So we will share a vision. It will come in Q1 next year for the longer term. Of course, we need to validate a number of assumptions that we have: transferability of assets, ability to keep the control on central bank money, but I think the same holds for everyone involved in those new technologies. And that means that we will potentially adapt our strategy or vision as needed. Of course, this cannot be done in isolation or in a vacuum, so that means that we will also establish the necessary contacts with the industry on the APIA part. It's not done yet. There is consensus that we need a true public-private partnership in this context. And at a point in time where getting to act together is probably becoming increasingly important than ever in Europe. If you allow me, I will steal 2 more minutes to bring a last consideration before a few words of conclusion. And this last consideration is about the topology of the new ecosystem. The value of tokenization and DLT stems from the combination of, on one hand, the tokens and the wealth of information that you have in the token in a standardized and structured form, combined with the ability to deploy smart contracts on a ledger and keep control on that the deployer of the smart contract can keep control on its business process. These 2 elements combined give the potential of the new technologies to be transformative. It is not the infrastructure. Where the infrastructure is located and who operates it, it becomes secondary in these new technologies. Between the waste and inefficiencies of a model where everyone would want to keep its own private ledger, and a model where there would be one single unified ledger. I recall that Edwin did not answer the question on the unified ledger this morning. So between a world where there would be plethora of private ledger and one single unified ledger, we believe that there is room for shared ledgers to emerge, where the ledger would be interoperable with other ledgers, and the ledger would be open by itself. We believe that would lower the cost of the infrastructure. It would mitigate inefficiencies stemming from fragmentation. You mentioned fragmentation. We really run the risk of going back to a situation where there is more fragmentation than before when DLT platforms start emerging. And we believe also that it's enabling true competition based on service and not on the control on the infrastructure. We believe that would be beneficial for the industry. And just then a few words, I guess, I forgot this slide. This is the roadmap for Pontes and APIA. My words of conclusion are, all seems to indicate that DLT-based solutions are likely to develop, but that there will be a long coexistence with legacy-based infrastructure. Many people today said it. And there is no good coexistence without investments on both sides. From the Eurosystem perspective, we remain fully committed to maintain and developing further Target 2 securities. but also to support innovation and the development of well-designed DLT-based ecosystems. Of course, harmonization and common rules remain essential. And finally, there is no good coexistence within good bridges. So we must collectively make sure that there will be efficient bridges between the two worlds, the legacy one and the tokenized one. Thank you.
This is interesting and ambitious at a time, right? So well done, Dimitri. Yes. Oh, well, Paco can probably be leveraging on your notes as well. Who knows? So, yes, Francisco, the floor is yours. Thank you.
Yes, thank you very much. Thank you, all of you, to join us. Thank you, ECSDA, for inviting me to this panel and for the great organization of the event. And thank you as well to my colleagues for the very insightful presentation they did. The topic is a challenge. Talking about the future is not easy. And I will try to contribute with the vision we have at SIX. Before I start, I have to say, or I have to make two disclaimers. The first one is that several of the topics that we have already mentioned will be repeated by myself because we are sharing the core topics. And the second disclaimer is that I'm not a salesperson. So I'm not going to sell anything in the room. Although it's true that during my presentation, the value proposition of SIX will emerge naturally. So apologize if some parts sound a bit marketing oriented. The agenda will be very simple, only 3 slides. The first one is about where we are now. The second one will be about what are the trends that we believe will shape the future. And the last slide will be about the how we plan to tackle them at SIX. So let's move with this one, no? Okay. This is the first one. You know it very well. It shows a highly fragmented European FMI's landscape. And this fragmentation clearly creates inefficiencies and creates complexity, cost, operational challenges, sometimes even it prevents healthy competition. And the main root cause is the lack of harmonization. So we all know that all the efforts done by the regulators, by the industry, and as well by our clients along all these years, trying to close the gap and working about increasing this efficiency, but harmonization will not be the only topic because there are only other trends that will define our future. So let's see if it works. Yeah. So let's take a look at the key industry trends that will transform our markets. As mentioned, harmonization and regulatory standards will continue to be on the top of the list because this process is fundamental for gain efficiency, scalability, and competitiveness. Second, as mentioned, is all around DLT. Not only as a tool, but as well regarding digital assets and tokenization. And you know that we at SIX have always been front runners in this space with our digital exchange SDX in Switzerland. And I will come back to this point in a few minutes. The third key trend is the shortening of the settlement cycle. Nothing new. Already almost half of the worldwide settlement volumes are already running on T+1 because the US, China, Canada, and many other markets are looking to this change in the coming years, Europe first. But T+1 is not only a technical change, it's a change of how we manage operations, how we manage our processes, and as well how we manage the risks, the liquidity, and the operations in general. On top of that, there is a new wave of operational efficiencies, using of the new technologies for increased efficiency in our companies. And clearly here, the artificial intelligence is one of the most powerful. And I'm not going to go into all the benefits that AI offers, but I would like to say that it's not only about process optimization, it's as well a driver of resilience and scalability. And finally, if you put harmonization on one side, DLT, T+1, and Gen AI in the same basket, the result is a natural transition to a 24/7 post-trade operations model. Therefore, we have a highly fragmented market in a time of continuous regulatory changes and clear trends focused on technology and efficiency. And I think that in that context, our role of CSDs must be to bring all these elements together to overcome that complexity to the benefit of our customers. And our vision at CIS is to build on three principal pillars: interoperable systems, user choice, and next-generation infrastructures. So let's move on the how, the last slide. Let's see, well, here you are. Bottom line, the conclusion is that we have a lot of things to do. First, we are committed to consolidating our platforms in order to deliver a unified client experience across all our services. The idea here is making things simpler and driving real efficiency. Actually, we are currently integrating fully our capabilities of SDX, our digital infrastructure, into our traditional post-trade world, bringing together digital and traditional assets. So in the final stage, we will have created one plug to two worlds, creating a seamless experience for our clients across Spain, Switzerland, and international. Additionally, one of our priorities will be efficiency. So automation is a must. Here, our objective is to generate scalability for our clients and use one common infrastructures. Data, mentioned already as well for some of the colleagues, will play a key role as well in our roadmap. In fact, some days ago, we have announced in Spain a new service called Market Insights that gives clients the intelligence that they need to make smarter business decisions. And T+1 adaptations will be one of its first use cases. And on top of that, we have at SIX a unique post-trade setup. We are the only post-trade provider with a pan-European interoperable multi-asset class CCP connected with all the CSDs in Europe through T2S, with the Swiss domestic CSD, and with our global settlement network connecting Europe globally. So in conclusion, every trend we have discussed is an opportunity to deliver in value to our clients, and our ambition is to be their pan-European partner of choice by delivering efficiency, innovation, and global connectivity. And similar to the T+1 project, our pan-European model takes into account Europe, Switzerland, and the UK. So thank you very much for your attention. I hope the presentation has been useful for you, and I think now it's time for the Q&A session.
Perfect.
Thank you very much.
Excellent timing as well. Thank you, Paco. And so, yes, it does look like we have quite a number of CSDs which are seeing themselves as the future competitors, right? And this is what the market has been asking us to do and to become. And this is the journey. So I'm really interested to see this evolution from many of you. We have been receiving many, many questions. Of course, some of them have received quite a number of different comments as well. So let's probably be starting. And I'm seeing several batches, right, of questions that we can be asking. Perhaps first to all of you indeed, what's about the timing for the delivery of your initiatives that you have in mind? So if each of you could be, perhaps starting with Olga, given that she was making the first presentation, so when your projects of integrated markets will be delivered.
So when do we deliver? We have started. So the first part of our delivery is a common platform to process corporate actions, and that's already live in Portugal and in Denmark, and more is going to come. The model that I mentioned in my speech, that is planned for September 26, so that's when we're starting to deliver that one. So a very clear roadmap, and as I said, it's only the first step.
Thank you, Isabelle.
So, you hear me?
Yes.
Okay. On the vision, which is the single point of access to the 27 markets in both commercial bank money and central bank money, it's 26 in commercial bank money and 27 in central bank money. For the other initiatives I mentioned, probably worth mentioning that Easy Focus Plus, it's Q1 next year. The digital user experience for funds, it's Q1 and Q2 26. And for everything that is digital, I think maybe to echo what Dimitri said, I mean, we are part of the initiative driven by Banque de France on the NECP, so it's 26. And if we are happily chosen for Digit in the UK, it will be June 26 as well. So nothing in the long term, but short term when it is to mentioning the initiative and moves that we all take.
It's very efficient indeed. Dimitri, well, I think you have mentioned the timeline, and broadly, I think we know it. So,
Yeah,
but
short.
parts can be taken a longer timeline.
Yeah, well, I don't know if you can hear me. Yes. Well, I wanted to say, well, this is for the DLT part. So there is the short term coming in September next year. Strangely enough, the long term comes in Q1 next year, but that's only the vision. And then we'll have probably a delivery path that is starting shortly after Q3 next year. And but I just want...
just for this DLT part already.
But I wanted to bring that, so that's for the DLT part. But I like to recall that we have in T2S, because the development that we do in T2S often serve the purpose of supporting the strategies of the different CSDs on T2S. And there we have a roadmap, a delivery roadmap, where we have 2 releases per year. I mean, you all know the delivery of new features twice a year. We have 4 releases per year, but only 2 where we deliver new features, and that's an ongoing story. Yeah.
Thank you. And so then a couple of other questions were related to the fact that we might be still a bit late on time in terms of getting ready for the stable coins in the US, which are already, of course, circulating. The Genius Act has been issued. So with this timeline, which is still very ambitious on the DLT side for digital euro, we're catching up, but are we quick enough? And then some colleagues have been even asking the questions whether we should not be modifying MiCAR so that the stable coins could be accepted freer somehow in Europe.
Well, I will not develop too much the point of MiCAR and the policy discussion on stable coins. As you can imagine, the Genius Act, and I think Sam mentioned how important the impact is of the Genius Act on what everyone is doing today. I would lie if I was not saying that this is also the case within the central banks. As you can imagine, there is a lot of discussions. Tonight I have to go back to Frankfurt because tomorrow morning there is a discussion on the topic, and it's not the only one. There are many talks and discussions on what attitude to adopt there. It will come quickly. But our strategy is also to promote central bank money in the tokenized world. We still believe that central bank money is the safest asset that exists, and we believe that for Europe, it's the best possible strategy is to make sure that central bank money is made available where it has value, and that's why central banks are not known to be quick and to be very reactive. I can tell you, for having been in many discussions in the Euro system, including in the Governing Council, the fact that we had, the typical reaction of the central bank would be to say, okay, do an analysis, let's meet 2 years later, and then we see what we do, and then we have a plan. This is not what we do here. We did some trials and experiment, and we got the message, you need to go fast, and you need to be ambitious. That's why, again, the 2 tracks, and not sharing secrets from those discussions. several governors in the Governing Council say this is still much too slow. We need to be much quicker to protect our interest in this tokenized world.
And just to confirm that, I think that the questions that we have seen mostly coming from the slide are very much in the direction of support, of having it as quickly as possible, of course, but we're very much understanding your challenges, of course, in terms of making sure that this is still delivered within the necessary stability, necessary resilience, and care for the change management process.
If I may, just one more point. I mean, it's maybe difficult for everyone to understand, but we were extremely lucky of this constant, innovation, search for innovation within the Euro system. It's not us, the ECB, but it was Banque de France, Bundesbank, and Banca Italia have been at their own initiative investigating for years already what to do. And when we did the trials and experiment, we tested 3 different solutions. And that's why we were in a position in the end to, by merging those three solutions, making sure that we have atomic settlement, but also the platform for tokenized assets, and also the connection with the target services. By merging those 3 solutions, we are in a position to react very quickly, I believe. But this is also because of the work that was done behind the scenes for several years by the Euro system.
Thank you. Apologies if it has taken a bit longer. So with Dimitri, Paco, so what's the timeline for you?
Yeah, no, calendar is very important. And I think we all have 2 years to come very, very busy, no? Because we are living in a situation that was not like this a couple of years ago. So we have T+1 that will be for sure a very important change, and we will use this project to change a lot of things in our internal systems and to get efficiency. We have a look on the central bank and how they will progress in these key projects around DLT, and Saving and Investment Union will come soon, and I'm sure that it will bring a lot of movements in Europe and a lot of discussions with clients. So clearly there is a couple of years ahead of us, very challenges with a lot of things, and there will be no one waiting for us to think twice something. So very intense.
Thank you, Paco. So the next bulk of questions was with regard to the CSD links. So some of the questions have been asked in the sense of whether the CSD links can be leveraged further, whether T2S can be leveraged further to be used indeed more intensively there as well. And I would add to that also a question to you, Dimitri, specifically, because I had an impression that some of those who have written the questions also had in mind that unified ledger might be somehow seen as a sort of replication of the CSD links. So if you could demystify and a bit explain, so what's the intention and what's the connectivity that you have in mind as well with the unified ledger?
Well, I mean, the term unified ledger was started really globally. Globally, where you would have all currencies, all forms of money, and also a very wide number of use cases supported there. I will share a personal view. I believe that in very good geopolitical situations, that would already have been quite a challenge, because everyone, even when things go well, everyone is, and I think that's a good thing, mindful of its own interest and the need to keep control in its own perimeter, and also sovereignty on its own currency. So I believe that the case of the unified ledger is already by itself a very, very difficult case. But when you look at what is happening now for a bit less than a year in terms of geopolitics and so on, I believe the likelihood of getting to that point is still reduced. Still, I believe that there is, as I mentioned in my intervention, I believe that between that situation and a situation where we would go back to a fragmentation with, we still miss the standards, the assets, the exchange and so on. We still miss a lot of standards in the tokenized world. And if we don't pay attention, we will fall into what actually nature would tell us is happening by default. By default, when you have a new technology, you will start with a very fragmented situation. And I believe it's really our duty altogether to avoid that this is happening. If we do that, then we may lose the battle against stablecoins.
Of course. And then the clarification of some of the legal concepts as well, right? So as colleagues have been mentioning during the fireside chat, is necessary as well. Great. So any comments with regards to the T2S links leveraging further?
Yes, naturally, yeah, because the day Euroclear Bank is connected to T2S, it will give the playing field for seeing a growth in the T2S settlement, naturally.
But one of the questions was quite challenging. So it was asking indeed whether you would agree with the Amiseco conclusion. I'm not sure whether I would read it that way. But so the question asks whether all the T2S connected CSDs should be using only T2S, only links on T2S, going through the T2S platforms.
No.
That's a business decision, right? Somehow.
No, but I mean,
and we do
it's
have
a short
the
answer,
that.
but to remind that having commercial bank money and more than 40 currencies available in the ICSDs and Euroclear in particular is something that is variable for the investment in Europe. So I think we should not give up on that.
Yes, and we do know that the ICSDs obviously do have international clients, right, as well, including international central banks that are not on T2S.
Maybe a comment on this international investment, because I'm not sure that the four of us insisted enough on that. If we don't find ways, and it's not necessarily the job of the infrastructures, but if Europe does not find ways of getting investment increasing and having capital markets more competitive, how will we fund this transformation, colleagues? How will we fund the coexistence of infrastructure for traditional assets and infrastructure for digital assets? It's going to cost a fortune, so we have to fund that. So we need to find a way to stimulate growth.
Excellent. Thank you.
I think we all agree on that. I think Dimitri said something that was really important. I think that competition on the basis of service rather than ownership of infrastructure or infrastructure, just because I think once we have a level playing field, and that's where the links through T2S is an important part, then there is a level playing field, and then we can really compete on the service.
Maybe just one additional comment on that. For those who know, in the telecom industry, if you look at what happened in the US, I don't remember, is it 20, 30 years ago, it was by law forbidden to have the same entity operating the infrastructure and offering services to the market. So it's forbidden by law. Either you are operating the infrastructure and then you have your own legal entity, or you offer services using then the rails. And I'm sure that when this was brought forward in the States a long time ago, it may have looked very heretic as a proposal to say, I mean, are you just crazy? You're dismantling things that are working very well. That was a good decision. And I believe if we don't manage to get any clause from that in Europe, it will be a failed opportunity to really battle for what matters, the services.
Excellent. Thank you. Paco, any comments on that? All has been said then. Just perhaps now that we have final seconds, very quickly, do we have an issue with the data? How do you see, because several of you have mentioned indeed the data, the need to leverage further the data. Even Dimitri has mentioned that there will be further work on issuance, so golden operational source. That was very interesting for us to know, I think. And indeed, several of the CSDs are working with the settlement data. Can you develop a bit further?
We sit on a daily basis on tons of data, and I have the feeling that we have not taken profit enough of this information for ourselves and for our clients. With this data, you can apply for business perspective, for efficiency, for creating new services. So this is part of the journey. I mean, get the use of this data and using that for all the improvements that we have. So I think it's a key part as well of our roadmap.
Thank you very much. And unfortunately, we are not able to take all the questions, so that we're advancing with the program. But thanks to the brilliant presentations, presenters, and speakers on this panel. Thank you very much indeed. And now we will be able to have a very short break, so for 20 minutes, and then we'll proceed with the rest of the conference day discussions on supervisions and geopolitics.